Welcome to MexMoves, our weekly podcast on Mexico business and finance. This is Damien.
Hi, everybody. This is Eduardo.
This week we have an interview with Gabriel Casillas. Gabriel is the chief Latin America Economist at Barclays Bank, and he's going to tell us a little why Mexico is actually doing much better. Mexico's economy is doing much better than many locals give credit for. And with the peso up in roughly 10% against the dollar this year, GDP growth expectations maybe inching up recently, interest rates coming down, of course. So far, Gabriel's predictions this year have been right. And then we have some snippets on Lithium, Mercado Pago, on the delay to the US sanctions against the intervened banks, and on Huachico Fiscal, on the illegal oil imports in Mexico. So with that, we'll move to Lithium, Eduardo. There was a great story by Diana Nava, who writes for Red Intelligence, a portal on financial news focused on emerging market debt, especially distressed debt, on the kind of disconnect between Mexico's lithium ambitions unveiled by the previous administration and the reality on the ground. I don't know if you remember, but back in 2022, the Mexican government under AMLO created Litio para Mexico, Litio MX, to exploit about 1.7 million metric tons of lithium reserves in Sonora. The vision was to make Mexico a key player in lithium and indirectly in battery supply chains, and help Mexico in this transition from conventional automobiles to electric cars. Anyway, 3 years have passed, goes the article by Diana. There's no pilot plant. There's basically no operational progress and no meaningful revenue. So nothing really has happened. And in the article, she contrasts this with Argentina. Its lithium sector is thriving, and this is in fact, before Milei. It's not related specifically to the last year. And you have big Chinese companies like Ganfeng Lithium producing tens of thousands of tons. And in Mexico, we have no industrial plan. Not only is that harming investment in this sector, but could even have a knock-on effect on global battery supply chain integration, with Mexico being absent in that market. As you may remember, about 4 years ago, Ganfeng, the same Ganfeng that's active in Argentina, acquired Bacanora Lithium for almost $400 million, gaining control of the Sonora Lithium project, which it was already an investor in. And Ganfeng has this proprietary kind of know-how that helps it extract lithium from clay, which is where the lithium is found in that part of Sonora. And they spent this money basically to invest, potentially billions of dollars to build a facility with 20,000 tons a year, scale it to maybe double that. And with their technology, they felt that they were going to be cost competitive, and this could have helped Mexico provide lithium for EV batteries and energy storage. But the government cancelled Ganfeng's concessions as part of the move of Litio MX, the sort of Pemex of lithium. And they've basically, as far as I understand, ceased all activities because they've lost their concessions. And they've filed an arbitration with the World Bank's ICSID to recover the lost investment. So basically, as things stand in mid-2025, Mexico has no lithium production. It's facing a big arbitration claim from the private company that was nearest extracting lithium, even if it was still some way away. And I think it's an example of public policy that so far at least hasn't gone Mexico's way. What's your read, Eduardo, on Diana's story?
Yeah, I think it's a very precise story on the situation that Mexico is facing with that mineral. It's a very depressing story, if you ask me, in the sense of all these great expectations that Andrés Manuel López Obrador created when he announced the nationalization of the lithium production, that it was for the Mexicans, and all the rhetoric that comes along with such things. Unfortunately, Diana's story brings to life what is really actually happening. Zero, nothing, zip, I haven't heard much from Claudia Sheinbaum on that matter and on whether she plans to put money into it or even open it up. I doubt that, as she's of not that mindset. So it'll probably be a lost opportunity again for Mexico, like we have seen and witnessed, Damien, so many times.
Yeah, I mean, the irony is, at the time, AMLO said that he wanted Mexico to follow the Bolivian model in lithium. And actually, that's exactly what's happened, because Bolivia, despite all the rhetoric, doesn't produce any lithium either. And so Mexico is going down that road of nationalizing a sector and then not being able to do anything about it. Claudia did talk about at the beginning potentially moving Lithium Nemex to Pemex and making Pemex kind of responsible for lithium as well. But with all Pemex's problems, I think that's far away from their priority right now.
Yeah, I mean, we can say he fulfilled his promise, Andres Manuel. On my end, Damien, as you saw, the three Mexican banks that were spotlighted by the Treasury for allegedly doing a little bit of money laundering for drug cartels or financing the acquisition of precursors to produce fentanyl from China. They got a little bit of a breathing room, could I say, so that they could still trade with their counterparts in the U.S. for 45 more days. I think this is relatively good news for the three companies. Nothing changes, unfortunately, on the element that they have been, their reputation has been severely damaged, but at least it gives them a little bit of time to reorganize, restructure, try to sell assets, portfolios, whatever, in an orderly fashion at a better price than they would have if they were going to be cut off in 21 days by the 21st of July. The new date is September 4th. So a bit of good news, which I also hints that the U.S., not that it's going to change its mind, but that at least it won't follow through with more of these disruptions that it created. I don't know. It's a certain goodwill position, probably. And so I guess the Mexican authorities also reacted quickly, and maybe they negotiated something. I don't know. But overall, I think it came as a benign signal, if I may say so.
Yeah, I think so. I think Mexico intervened the banks right away. All the relevant sort of intermediaries, unfortunately for them, kind of cut off relations or announced that they would do so shortly. So Mexico has done what the U.S. has asked, and in return, they've got this slight delay to help organize the situation going forward. Now, Gerardo Esquivel, the former deputy finance minister and central bank vice governor, has had a couple of articles in Milenio on this, sort of saying, I think rightly, that what this shows is that the U.S., without offering proof, just anecdotal evidence, as it's allowed to do under the new U.S. law, can close down any Mexican bank at will, and that gives it enormous power, should it want to, exercise that power. So it's another thing that the U.S. can do, and there isn't really a lot of recourse in Mexico. So the threat, even though I don't think it will be exercised again in the short term, at least, the threat is there, and that is, must be very unnerving for the government and for shareholders in financial entities that, in a way that is very difficult to appeal, given the way the law is written. They can effectively close down any financial institution.
I would say so, yeah. That's the danger that Mexico faces with the new way the power this law gives the Treasury and its units to highlight these issues, even if they don't have total proof.
So, Eduardo, as you know, I'm in Britain right now, as you are, even if we're not in the same country. I'm in Scotland. I think you're in England. Mexicans always, not just Mexicans, most people around the world get confused about England and Scotland being different countries, but the United Kingdom being one sort of sovereign entity. But that's probably for another podcast. But there's a story in the Daily Mail, the most read online and physical newspaper here in Britain, about Cancun being ranked the number one most disappointing tourist city out of 100 in the world, according to a review of 100,000 Google reviews. And 14% of those 100,000 reviews mentioned overpricing. This is according to the Daily Mail. Aggressive vendors, lack of authenticity, tourist traps. Top complaints were crowded beaches, abandoned construction zones, taxi mafia, street harassment. Anyway, a lot of things that the Daily Mail writes are not true, and some of the things, of course, are true. So I looked into the airport numbers, and actually they are quite startling, really. This year, total traffic to Cancun, because it's part of the Azor airport network, so the numbers are public. Traffic is down about 5%. Whereas if you look at Monterrey, you're seeing double-digit growth in the Monterrey airport. So Cancun airport, and it's by far the biggest airport in the Azor stable of airports, is performing very poorly. And, there's different explanations for that. There's a new airport at Tulum, which is obviously taking some traffic away from Cancun. I think that some airlines have cut Cancun routes, but that presumably is a symptom of the problems, not a cause. There are, Googling this, a lot of immigration and custom delays in the Cancun airport, which might have led to some frustration. There's sort of a talk about shifting tourist preferences to more kind of boutique-y, authentic destinations that would, rule out the big kind of skyscrapers along Cancun. There's talk about, violence, although, overall that part of Mexico remains pretty safe. And then there's, a lot of people mentioned the very high taxi prices, and there's been this very sort of public fight that's led to violence, in fact, between Uber and the Cancun airport. Taxis are trying to stop Uber come in. Despite Uber having all the legal requirements to be able to offer their services. So there are some concerns. It is backed up by very poor data, traffic data at Cancun Airport, which contrasts with the data you see at some of the other airports in Mexico, which are doing reasonably well. Have you been to Cancun recently?
No, I haven't, Damien. I'm not surprised to hear a little bit about this, because the times that I've been, it's been a while, but not too far along back. The Uber element is quite annoying, to be honest, and the prices are quite high, to be honest. So I think this is a wake-up call. I think it's a huge, important tourist destination for Mexico and for the state of Quintana Roo. So I hope that the governor sees this report and takes action, because there needs to be a lot to be done to bring back the shining flair that Cancun had years ago. I don't know if they can, but at least in terms of prices and services and treatment of people, definitely there's always room for better services in that arena. So I'm not totally surprised. I think it's a huge black eye for the most profitable, probably, port of entry for tourists in Mexico, and we'll have to wait and see whether the government locally or federal does something about it. The tourism minister does something about it, because they do bring a lot of revenue for Cancun, and if it continues to fall in terms of appreciations and in terms of tourists coming in, a lot of people will be hurt. There's a lot of money invested in that area of Mexico.
For sure.
I have also, Damien, a little snippet on Mercado Pago, the one that we've been following through. They launched recently a new point-of-sale terminal with new functionality for the owners of the businesses that use it, that allows them to track inventory, cash flow, and other metrics that will give mid-size or small companies a lot of information about their business, what they should continue providing, maybe what should they take out of their shelves because it's not being sold in numbers that they had expected. Any functionality in that sense, I think, shows how committed the company is to penetrate that arm of its retail online service. I think it's moving even ahead of Amazon, which we have seen offering with some of the banks some credit facilities. So I think Mercado Pago is a few steps forward in that arena, and it's quite impressive what they're doing. They don't seem to be taking anything for granted or sitting still. They're moving on and innovating and bringing new products to their clients.
Yeah, I read that if Amazon's financial arm was as big as Mercado Pago's is relative to the size of Amazon, Amazon Pago, Amazon Payment would be bigger than JP Morgan. So it's although in e-commerce they're very similar businesses in Latin America, the outside e-commerce, Amazon obviously has cloud, which Mercado Pago doesn't have in a meaningful way. Mercado Libre doesn't have in a meaningful way, but then Mercado Libre has Mercado Pago, which is huge in credit, in payments, in terminals, POS, and now it seems like they're sort of moving into a sort of an SME ERP, a sort of financial system for small and medium-sized Mexican companies to manage better their cash flows and their inventories using the data from the POS. So it looks like and it's very difficult. As Clippers has unfortunately witnessed, it's difficult to compete with the scale and the muscle of Mercado Pago. Their reach is just at this point enormous, and they can subsidize businesses for longer than others. I guess Amazon did the same, in the US and developed markets. So moving on to the last note I have, Eduardo, is the huachicoleo fiscal, basically illegal importing of fuel in Mexico, has been getting a lot of attention. There was a huge story back in June in the Financial Times. It was a big read about how smuggled fuel, mainly from Texas, is a big hole for the finance ministry and a source of money for the cartels who use that money in part, to fund drug trafficking and extortion rings and everything else. Also, the El País had a big story on it, saying that the huachicoleo fiscal drains about 9 billion from the public finances, which is a massive number, bigger than other numbers I've seen. It's like over 0.5% of GDP. So for those who are not that familiar with the subject, so you have what's called the traditional huachicoleo, which is stealing fuel from Pemex pipeline or hijacking tankers. So that's outright theft. And then you have huachicoleo fiscal, which is basically smuggling from the US using fake invoices. So basically labeling gasoline as oil additives or lubricants or other products that are not taxed, and you evade excise taxes, or YEPs as they're called here, and you evade VAT. And that can give you a 40% kind of margin over gas sold by Pemex or some of the other gas stations. And some estimates in the FT story talk about 30% of all gasoline in Mexico is sold illegally through this huachicoleo fiscal scheme. Back in March, there was a decommissioning of 10 million liters of diesel seized from a Singapore-flagged tanker with Texas origin, which was falsely declaring gasoline as oil additives. The FT had a great interview with a gas station owner who said, everyone knows who's smuggling, but the margins are too good to resist. And often, if you don't take the smuggled oil, you'll get threatened with violence. So, plomo or plata, as they say. And what's driving that? It was, I guess back almost 10 years ago, the original energy reform opened up the fuel market so to private importers. But regulation and oversight of that has clearly lacked. There's technology gap. The customs officials sort of lack the means to identify what's legal and not illegal. Obviously, corruption, massive corruption, both at the local level and at the federal customs level. I mean, in the FT story, they have ships in Tamaulipas in ports for a week unloading gasoline without anyone paying any attention. And then the underlying issue is this, which is perfectly normal and how gasoline works in most parts of the world, this big gap between the retail price and the price before you pay all the taxes, the spread that's driving this activity. It should be said that this activity is starting in the US. So, US players are almost by definition cognizant of what is going on. And you've also seen US authorities imprison different players for being involved in this and the sort of related money laundering. And it's difficult to know how it's going to kind of be eliminated, but I think we can give the Sheinbaum government some credit in these seizures. I mentioned the one in Tamaulipas. There was another seizure in Coahuila, another one in Tabasco, Baja. So compared to the Andrés Manuel López Obrador administration, there's been a big effort to crack down on this, especially the last few months. I think pretty much every week there's a headline story about another gang, either for the Huachicol tradicional or the Huachicol fiscal. But you're seeing a lot of operatives. But what you're not seeing, as far as I know, is high-level kind of state government officials or federal government officials being arrested. So most of the people who are being apprehended are either related to well-known cartels or well-known criminal gangs, but they haven't yet got to the door, and maybe they don't want to get to the door of people in the public sector that have presumably have been facilitating this.
Yeah, that last comment, Damien, was what I was going to add, because there's a lot of speculation in Mexico that some of the money from those illegal sales is being directed to political parties. No proof there, no nothing, but it's a bit surprising that no major official has been detained or arrested or highlighted or pinpointed to. And for an operation of the size that we've seen, you just wonder how come the authorities have not noticed it, or the other thing, no? They are engaged in it, or they take part of the profits with some corruption and some money or things like that. So it's another big problem that Claudia has to face. She's tackling. At least we're hearing about the destruction or the detention or the seizing of even these large tanks in Tamaulipas, millions of liters of diesels and so on and so forth. So I guess she is between a rock and a hard place and is trying to do as much as she can. And hopefully she'll be able to do it.
Today on the MexMoves podcast, we're joined by one of the top economists in Latin America, Gabriel Casillas, who's the chief economist for Latin America at Barclays Bank. Gabriel, how are you?
Hi, thanks very much for the invitation, Damien.
It's our pleasure, Gabriel. Gabriel brings some decades of experience in both the public and the private sectors, from Barclays to Banorte prior to that. Also, he worked with me, in fact, at UBS a long time ago, and he's worked in Mexico's central bank. He's also been president of the Mexican Association of Independent Analysts, and he's, for me at least, one of the top, if not the top, interpreter of Mexico's macroeconomic outlook. Gabriel, I wanted to start off. You're both a Mexican, obviously, and living in the US near New York, in Greenwich, a Wall Street analyst. How do Mexicans and Wall Streets differ in their view of the Mexican economy? What's the sort of biggest gap in the way they think about Mexico between those in Wall Street and those in Polanco or Las Lomas or Bosques de las Lomas?
Hey, thank you, Damien. Thanks for such a generous introduction. So, going real quick, I mean, the usual thing that you have encountered for many years, I'm sure, is that, in Mexico, people locally are more pessimistic than outside, abroad. So we continue to find that. But, the gap is big right now. When I speak with somebody, in Mexico, as you said, in Polanco, Las Lomas, or even in Monterrey, I think they have a very pessimistic view of how things are happening because of, this dual shock, from a global side, having, Donald Trump as president of the U.S. with all these trade uncertainties and some others that are not trade related. And in Mexico, the local shock with all, with Morena winning with, super majorities in both chambers and making different reforms, particularly the judiciary reform, among others. While, outside it's seen like, President Sheinbaum has shown at least, three very important changes vis-a-vis former President AMLO. One is a 180-degree turn in energy policy, allowing private sector participation. Number two, a 180-degree turn in security policy, from hugs, not bullets, to really being a hardliner, and that's a major shift. And of course, that has allowed a better relationship with President Trump in all these trade and non-trade negotiations. And number three, very important here, fiscal prudence. So far, even though there were some doubts at the beginning of Claudia Sheinbaum's administration, now there's this idea that she's fiscally prudent and also respectful of central bank autonomy, particularly with what has happened with the operational surplus, and also the appointment of Gabriel Casillas as deputy governor of the central bank. Quite a good appointment. So definitely, and of course, from abroad, you always compare with other countries, no? And what happened, for example, in other emerging economies, particularly in Latin America, is that they all went ballistic with the fiscal policy during COVID. And then after COVID, we haven't seen a lot of fiscal consolidation. And on top of that, we had elections in every single country, so that made it more difficult to perform any fiscal consolidation. So now we're seeing fiscal problems in Brazil, fiscal problems in Colombia, in Peru, and in Mexico. Well, it looks nice from that point of view. I mean, that's to make a long story short.
On the fiscal side, we've seen a big increase in tax revenues, much faster than the increase in GDP over the last, especially the last 6 months. What do you attribute that to? What explains that?
Well, I think three things. One, I think GDP is actually, economic activity is in better shape than most of my competitors think, and I can elaborate on that. But I think that's part of the reason. Number two, Hacienda, the Minister of Finance, have continued to conduct certain tax collection efficiency measures that were actually left by former Minister of Finance. Like there was a playbook, and they have continued to play with that, avoiding tax loops and, with technology going to collect taxes where they were not able to in the past. And number three, there's been some, I don't want to call it fiscal terrorism, but, fiscal, kind of hardline in terms of, some companies were charged a lot of taxes and a lot of, past due fees and stuff in the past few years. And a lot of people thought that this could be a one-off thing, and it hasn't, because at the end, companies that, used to adopt very, tax, it's not tax illusion, strategies in the past very aggressively. Now they prefer to pay more taxes. Actually, the effective tax rate that, 7-8 years ago was around 17% in terms of corporate income tax. We estimate it has increased in the past few years to something around 21-22%. So I think those are the three reasons.
And Gabriel, how worried are you about Pemex as a standalone entity? Because obviously production is falling quite sharply, and as a fiscal drain for the government. And do you have any idea what the government is planning to do to fix Pemex? Because I don't.
Okay. Well, you know a lot about Pemex also, Damian. But yeah, let me tell you my side. I think that there are many problems, but if we can point to three problems, you have one problem that downstream, particularly refining, causes a lot of losses. Because usually in exploration and production, they have been somewhat fine, actually make a profit. But you have problem number two, that it's how suppliers have been handled, and they have been mishandled, and it's not the same situation as before. Before, Pemex was a monopoly, and, suppliers were able or were willing to accept very difficult conditions in order to continue to serve Pemex. And things have changed. These suppliers now have diversified, and they are no longer willing to accept these conditions of non-payment for a long period of time. And of course, these have worsened. And then you have problem number three, that it's about the debt, the debt and the debt servicing. So in this context, if the government wants to implement a plan, I think they have to, and they're saying they will, because in 2026 we will have a wall of payments in Pemex. We have a lot of bond maturities on top of supplier debt, on top of RCFs and some other credit lines. So it's the number can grow all the way up to $30 billion. So I think the government needs to do something about it. And it should go at least in these ways. So number one, I think they will have an operational leg trying to reduce losses, and this will mean reduction of refining, at least. That's number one. Number two, it would be a medium-term funding plan. We think that maybe one way to do it is just to have a multi-year commitment to swap Pemex bonds for UMS for like $8 to $10 billion a year in the next 5 years. And then a third leg that President Sheinbaum has been mentioning, that is ways or changes in the contracts to attract foreign companies, because so far they have opened up contracts and foreign companies have not been interested. And of course, that could alleviate some of the situation in the operational side, particularly with joint ventures. No? So these are the three things that I think Pemex should do and will probably do if the government really wants to at least operate without hiccups in the next 5 years, like with fears of losing investment grade. No, I mean that will not fix all the Pemex things, but at least will fix the most pressing things.
Gabriel, following on Damien's question on the Pemex situation, I don't see any signs from the government on tapering down refining. I think Dos Bocas is being put up to a test, and they're going to try to bring more capacity. I don't know if that means lowering the other ones that might be less profitable. But why do you think that's one thing that they will do? And the other one, just to follow up, if the government does what you say, that it swaps Pemex debt for UMS's bonds, wouldn't that be a big strain on fiscal finances or the fiscal status of Mexico?
Well, hi, Eduardo. I agree with you. It's very hard. More so that the government has been, having this idea of refining more and have this, sovereignty in terms of energy and gasoline refining. However, this is where Pemex is losing more money, no? And so far, it seems that Dos Bocas, once it become fully operational, it could be better than other refineries. So at the end, I think on a net basis, they can, in a politically savvy way, say that Dos Bocas is a great refinery and they were able to shut down, 2 of the 6 refineries, and then on a net basis refine less. I think that could be a way of doing it. At the end, of course, Claudia Sheinbaum wants to be politically savvy, not to, go against, the party core issues. But so far, she's done important changes, no? Like insecurity, or even, opening up Pemex for contracts.
And on the debt side, does that give you a worry element that it might boost?
Yeah, well, no, it will have a physical cost. It's not going to be like seamless or costless. But at the end, if it's these swaps, that I think is the best option, because you could issue UMS and buy back Pemex bonds voluntarily. But I think a swap will make more sense because you control both legs of the operation. And in this context, well, the debt to GDP ratio, in the way that we have been used to see it, this historical balance of public sector borrowing requirements is super long word, but saying it's total debt of the government, including the SOEs, then it will remain around the same, around 52% of GDP. So in this context, I don't think this will create a lot of hiccups. Of course, there are some rating agencies that take a look to Pemex really independently from the government, but maybe they have to change their view because, at the end, everybody sees this, debt to GDP ratio in this context, no?
Correct. Now, one thing on the judicial reform, I know that short term we'll have to wait and see how it develops, but are you worried long term that this is a reversal of the democratic push that Mexico faced before and we're getting back to a one-party state that controls everything? Would that impact the economy? That's the main topic. Would it hurt Mexico's economic growth futures?
Yeah, well, it's a very deep question, but let me answer it in two parts. So part number one, I think we are somewhat back to the, PRI years. I mean, not only because of Morena, but because, the opposition parties are extremely weak, So in a way, I mean, and I think it's going to take a long period of time to really have some, strong opposition back. So in this context, we're back there in a way, no? So in that sense, that by itself has some will create costs on the economy, no? And the other one, in terms of the judiciary reform, per se, honestly, we had a very bad judiciary power, no? I mean, if you take a look to all the rankings, the World Justice Project or the impunity index, we're ranking around like 85 out of 100 countries, on the lower part, of course, or 114 out of 150 countries. So we're ranking very badly in terms of the judiciary power. And unfortunately, this opportunity was not taken to improve it. No. So it's like we're going to continue to be ranked very low or even worse, probably. And it's very unfortunate because, all of these rankings, one of the issues about the judges, for example, is that Mexico was very low in terms of number of judges per 100,000 inhabitants. No, in the world, there are 15, 16 on average. In Latin America, there are around 7. And in Mexico, we had 2. So it was not a problem of changing or if it were good or bad. We should have started with more judges, to tackle all the cases that unfortunately they just don't go through. So a lot of companies and people never felt protected by the judiciary power in Mexico. So now I don't think that one's going to change much, or it could be worse. No, it's going to be the same or worse. I don't see how it can improve. Now, in terms of democracy, at some point, if the government doesn't do a good job, people can get angry on that, and they can vote for judges from a different party, and then it will be the other way around. No? You will have a very a lot of opposition in the judiciary power. That's something we have not seen in the past, and I don't know exactly how it's going to work. I'm not an expert on that, but so far, as I said in the first part of my answer, I think we're already back to one party system, at least because of the two things. So
we've seen, Gabriel, the peso revaluing maybe near 10% this year against the US dollar. Do you think that's because the markets and economists are confident that Mexico will get preferential access to the US under existing or renegotiated USMCA? Or do you think that's related to overall dollar weakness against most major currencies in the world, or is it a bit of both?
Well, I think it's both, and there's a third thing, Damian. The part on the dollar weakness, of course, is everywhere, and that's the global main reason. Number two, I do think market participants really see Mexico as having, an upper hand or, a better relation with the U.S. in any way. At the end, even when people ask about nearshoring, if it's dead or it's going to rebirth or we're going to have nearshoring 2.0, I think people are more optimistic on that than saying, well, at the end, these companies will produce more in Mexico than before. Trump boosted nearshoring 1.0. Nearshoring 2.0 should be here. Maybe it's going to be different than the first one, but will be there. So that's important. And there's a third leg that's important in our view is that at the end the carry trade has been important too. And the Central Bank of Mexico, even though right now it's in easing mode, cutting rates, at the end it was the Central Bank in Latin America it was the last to start cutting rates and was very shy to do it. So far the carry trade still matters. And in this very same context, whenever the Central Bank of Mexico cuts rates and the US doesn't, the spread tightens, of course. But if the spread tightens, usually you inject some vulnerability to dollar mex and volatility. But right now, the share of foreign bond holders in the Mexico-denominated government debt is quite low. No, at some point we saw it at above 60% in the M bono side. Now it's around 30%. So that reduces the volatility induced that could be induced by tightening the spread between Fed funds and the reference rate. So I think these are the three reasons. Which one has more weight? Honestly, I think the second one, that Mexico is seen as could have a better special treatment from the US. I think that's the most important one. Although everybody is going to say that number one, the global, dollar weakness is number one.
On the second thing, what do you have a sort of specific outlook for USMCA? Will it change very significantly when there's a renegotiation or opening up in 2026? Do you think it will basically be the way it's been since Trump won?
Yeah, well, three things. One, it's going to be different for sure. And probably even, I think that maybe, the USMCA is gonna change significantly by not having like Canada, Mexico, and the US. So maybe, at the end, we're going to, in the case from a Mexico standpoint, we're going to end up with just a bilateral agreement. Right now, the situations that Canada and Mexico have to discuss with the US are totally different. The only common theme probably is automotive sector, but the share in Mexico is very high and Canada is not. So maybe we're going to end up with no Canada in the treaty. That would be my first take. Number two, I think that at the end, negotiations have already are taking place as we speak. They have been taking place in the past few months. We have seen delegation government officials and also Mexican companies, also global companies, working with state governors, doing lobbying with legislators in the U.S., with USTR Greer, with U.S. Secretary Lutnick. So I think already negotiations are taking place, and this early review of the USMCA that's supposed to start in late September, I think when we get there, it's going to be much easier because a lot of work has already been done. And I think probably maybe by December we'll end up that. And maybe it's very optimistic to say that, but I think that's going to be the case. And as uncertainty goes down, we're going to see a rebirth of nearshoring 2.0. So, and number three, in the automotive sector, I think that President Trump wants to have the finished cars in the U.S. He wants the stamp of cars to say made in the U.S. So maybe in the case of Mexico, we're going to produce, or the growth, at least in terms of production in the automotive sector, is going to be more in the auto parts sector. That we have already seen that in the past few years, and less in finished cars. I think that could be the trend going forward, and those could be the differences in our view.
But those differences won't stop nearshoring investment in your perspective. I mean, it will presumably impede investment in the finished car sector. People aren't going to invest in finished cars if there's going to be big tariffs to export them to the US, but they'll invest more in auto parts. But the net effect will continue to be Mexico gaining share of US imports as it gained under Trump and indeed under Biden at the expense of China and other Asian countries for the most part.
Definitely. I think so. And that's what I think a lot of market participants believe. And two important things here is one is, people were a little bit disappointed because, with nearshoring 1.0, because they didn't see like explosion of FDI, like going to $50 or $60 billion a year. But I think the model has changed. I mean, no company now wants to get to Mexico and, buy a piece of land and, start building the factory from scratch. I think they want to get to a place that is safe, that provides the, water, the right infrastructure, water, electricity, and get there. And that's what industrial parks provide. So that's why we saw a boom in industrial parks in 23 and 24. Actually, if you see like what happened in 2023, the amount of money that was invested in nominal terms in industrial parks, it was something around $11 billion. So I think that could have been like FDI in the previous model, added to the $38 billion that happened that year. So I think it happened. But of course, with the twin election and then having seen Trump in the ballot, Trump winning, etc., I think nearshoring was paused. But I mean, there are companies that invested some time ago, and they continue they're finishing their investments. You have like even semiconductors companies that are building some of the factory in the western part of Mexico.
Gabriel, what's getting back to the beginning of the talk, what's your outlook for the Mexican economy for this year and 2026? And I'm sure it's not a very exciting number. Maybe I'm wrong, but aren't we seeing a very modest growth in this country, and that needs to be much higher?
Of course. Yeah, no, definitely. I mean, the economy is slowing down. There's no doubt of that. But next year, I'm not so pessimistic about it. But yeah, I mean, for this year, I have 0.7% GDP growth. That actually is quite an optimistic print vis-a-vis, competitors or consensus that is closer to 0%. But still, saying you're optimistic with 0.7% is not very optimistic after all. So definitely, yeah, the economy is slowing down. Yeah, it's a dual shock, having, the twin election last year, having, this set of reforms that none of those are positive for growth. And of course, the judicial reform, the worst. And you have the global shock with Trump and the trade wars. I mean, I think we all agree on that dual shock. The things that make it slightly different vis-a-vis what our slightly more optimistic number is twofold. One is how to interpret what happened in the first half of last year, that what we saw is, people thought that, the economy was doing somewhat okay. And then we saw a boom in Q3 because, it was the end of AMLO's administration, and then a contraction in GDP in the fourth quarter because, AMLO was done and the new administration came in. I think that's a wrong interpretation. I think what happened in the first half of last year, in 2024, is that a lot of one-offs happened. You have El Nino affecting significantly agricultural production. You have the system that the Mexican IRS, the SAT, uses for import and export stopped working several days and intermittently, and some other one-offs, and those, all of them were fixed by Q3. So that's why we saw the boom. And that doesn't mean that Q4 was a contraction because it was the economy was contracting. It was more because of these statistical things that you cannot manage only with seasonal adjustment. So if you see that, and on the one hand, and I said twofold, the other part is the impact of government spending. And what happened is that due to how fiscal accounting is in Mexico, that it's in cash basis and not in accrued basis, what happened is all the infrastructure that was built during AMLO, his projects, the refinery, the mine train, all happened in 2023, but the increase in the deficit to pay them was increased in 24. So the fiscal consolidation that is taking place this year in 2025, actually it's happening, yeah. They are not investing in those things, but the impact on economic activity already happened in 24. Actually, if you take a look to investment infrastructure from the government in 2023, it increased at 2-digit pace, and then it decreased and it contracted in 2024. So in 2025, we're not seeing that impact. So I think that just because of these issues, the number is not going to be as low as consensus believes or our colleagues. I think we're going to be around 0.7 or even closer to 1%. No, that would be. And then for next year, we have a 2% growth that is above consensus. That is around 1.5%. And this has to do because we think the worst part of the trade wars with the U.S. or the trade uncertainties, and the worst part of the bad reforms coming from legacy reforms from AMLO, I think those two things are gone now and are past. So now business confidence, even though it's very low, it has started to improve. And some of the companies, the big companies, are investing in Mexico, and the smaller companies, small and medium size, are the ones that have not been invested, that have been really sad and not being very confident. Now they have to invest because they continue to get demand from their goods and services from the big companies, and they will have to start to invest and hire people. So we're going to see a better second half of this year, and it's going to improve in 2026. That's our view on in this context.
On that note, Gabriel, I do believe what Damien said at the very beginning, that you're one of the top analysts. Your word is very important. Your perspective, it's most of the time right on. So thank you again for chatting with Damien and I. We'll hope we'll do it again some other time.
On the contrary, thank you very much. Always nice to talk to you, and in this podcast is great. So I'm honored to have been invited, and always nice to exchange views with you and Damien.
Great. Well, that's it for me. Thank you very much, everyone.
Thank you, everyone. That's it for me too. We hope that you're logged in again next week. Don't forget to subscribe.